Shriram from Shriram City Union Finance. Yet again, I will spare you the hassle of hearing an introduction from me, but if there is one line with which I can introduce her, she is probably the toughest woman who's running any NBFC in this country today. In the banking space, of course, there's a little bit of competition amongst the women bankers on who might be considered to be number one. I think in the NBFC space, there's hardly any. So with that, I would request you, ma'am, to please come and share your thoughts with us.
Good morning. I don't envy Samit Ghosh because when this thing was discussed in our forum, whether to be a universal bank first 3 years back, then once again maybe we had to look at SFP. I had one clear stand. I'd love to have the bankers chasing us, giving us money. I don't want to go behind bankers for all this other things. So I thought the other side is never green. One of the few NBFCs, we love to be an NBFC. It's a nice position to be in. And we really look up to you now to see whether the next auto route which is available for banking, whether we should look at it. We'll see post your experience whether we should.
I often wonder now whether you've done the right thing.
So we are still watching, observing and learning. As I used to say to my colleagues, that I have a big brother Shriram Transport, and we allow them to take all the experiment leaders, and when they have got it after a few errors, that I go straight and first time right. So we don't mind doing that first time right after you go the product. Just to put it in perspective, Shriram City is the one of the younger outfits of the Shriram group. Shriram Transport is a lot more older, larger balance sheet. Actually, I've said in many forums, many public forums, but I have the privilege of saying one of the reasons today Shriram City existed. We talk about female ferticide, we talk about so many things. Shriram Group, when it merged, we had 4 Shriram NBFCs, Shriram Transport, Shriram Investments, Shriram Overseas and Shriram City Union Finance. 10 years ago, when the merger could have happened and Shriram City would probably never have existed today. One of the key persons to our today, the reason I'm standing before you is Mr. Dinanath. It was his and Mr. Kamath and Mr. Babu in ICICI Bank who did give this idea to us that why aren't you using a chit fund other than just mobilizing deposits through the chit fund for where the savers post their borrowing and post their liquid, they would come and deposit the Shriram Transport. He said, why aren't you looking them as your customers to lend to? Till then we never looked at the chit fund customers to lend, and we really wondered who will give us capital for this lending, who will trust us to give money to this small SMEs. Truck itself was such a big challenge, that to a used truck, and we attempted. So we were a little defeated, and it was the ICICI Bank which came up in 2002, gave us something called an on-tap securitization. I honestly did that business with zero capital. I don't know whether Mr. Dinanath knows about it, but we did, and I can say he was a smart businessman because he got 21% zero risk return, where we put in all our sweat to it. But it was a fantastic learning part. So I say to many of my other colleagues, the first thing to learn in NBFC is the art of collection. Then you can lend. I mean, if you want to lend money, people are there, they're the key. The most difficult part of a business is collection. So while in the chit fund, there was a natural collection mechanism because there were savers and borrowers together, and it's a community sort of a lending, very closed user group. And yeah, we did fantastically well in collection, but we were a little worried that if I were to lend to somebody without that control of a chit fund, that you as a price subscriber, you're not a price subscriber, will I be able to collect money? And I think the first step we did was to take the experience from ICICI Bank. We actually wanted to consumer financing. Where the sales, because I used to say my marketing is taken care by those days Sachidanand, now Dhoni, two-wheelers, and they do all the marketing. The dealer showroom is ready with all the products. All that I require is to be there, to be available to lend and then collect money. It was a very simple task. All that we had to make sure we were perfect is OPEX and collection. The operating expenses have to be kept under control. We need to know how much we can pay for origination, how much we should keep for us for collection expenses, and make sure the collection consistently collect, and that make sure that profitability was intact. What we see in spreadsheet is available at the end of the year. So this was something we perfected it. Today, indirectly we ended up becoming competitive to HDFC Bank itself in the two-wheeler financing. We took over from ICICI Bank in the two-wheeler space, and today I think after 14 years of hard work, today we are finally reached the #1 position in the two-wheeler financing space, and I think thanks to the competition which we get from HDFC Bank and other banks, made sure that we were very profitable. We were on a very tight, efficiency was definitely required, and that made sure that we were continuing to maintain a lot of, the ROA is still up for us. The next thing was, after having learned the collection and having a check fund origin, then what is it we able to do with the check fund? We are the employees, we are the brand, and what he said for the eastern region. In south, definitely we were a brand. We are a brand. There is this brand loyalty for Shriram Group. Like people say, Hanuman needs somebody to tell him what his strength was. Somebody else to tell Shriram what our strength was. And it took us years to understand that we were a brand. We were very shy of going to the market. We always did a lot of agency direct market. We never went directly to the market. We never went and solicited business. We had a lot of agency force. But then we realized that we had a huge brand name, and that means that a lot of employees and brand loyalty, which could attract a lot of MSME customers. Now, why do you attach a brand to an MSME customer? The micro, small, or more in the micro and small rather than the medium. The customers are shy of borrowing. This is still an Indian market, it's still the capitalist market, they still have not got into the habit of borrowing for everything. They still believe that they have to be debt free. They haven't started a business, they don't want to tell their family members that they are borrowing for their business. It's a sign of success is to be debt free. My business is all making them indebted. Now, how do I make them comfortable to borrow from us? Not that we will create trouble for them, we will be an asshole, we will take away things from them. So we had to get into the MSME. Well, we did that through the chit fund. So use the goodwill of the chit fund initially. Today we have grown much beyond the chit fund. So some of you keep ask the question, how are you going to leverage? Now I think the chit fund will leverage from Shriram City, not the other way around. Our number of customers is 2.5 lakh customers in the chit fund space, in the MSME space alone. And that's a large customer base. And the interesting part of this customer base is the repeat customers. They are in business. It's not a transaction oriented, it is a relationship oriented. So I have acquired the customers, I have acquired the customers for lifetime. It's not one vehicle you purchase, I don't come back again to buy every 3 years, I don't keep buying vehicle. Okay, and not necessarily you go for the same financier again, because it's just a question of what brand, what was the financier at that point in time. Your loyalty is to the brand and make of the vehicle, and very little to the financier. That's when in Shriram Transport we sort of looked at differently as a used vehicle, and you are keen on the financier, not on the vehicle model. Who gives me money at that margin? I'm interested rather than the make and model of the vehicle. So we realized that we have to get out of this. Shriram Transport decided that they should get out of the new vehicle market, and that's where the brand loyalty or the financial loyalty is very limited. We decided that same thing, we have to create this loyalty in the MSME space and build a large customer base. This business, well, efficiency was very important. Initially, the cost structure is a little overboard. We realized, as what Mr. Ghosh said, they are not interested in technology yet. Not yet. They are there. Very, very soon we are on our way to move towards technology. But when we started 10 years ago, technology was not relevant. What they needed was people. And they wanted to see people who would look and feel and talk the same language as they would do. I can't get a guy from a college, MBA, give him jargons, ask him the ratios, put him feeling uncomfortable, and then make him expect to take money from him. It was not going to work. So we had the tough way of actually helping the businessman draft out his P&L balance sheet, which he was even uncomfortable drawing upon. We were not wanting to know why. He just felt, for whatever reasons, he would never want to draw up a P&L balance sheet, and we were struggling to figure out how to make him understand what is. The simple question is, what is capital being invested in the business? You can ask many people, many MSMEs, small traders, how much you have invested. You could get answers as nothing. Nothing. But if you borrowed, no, I don't have. So where is this stock coming from? Oh, this is here, I bought it from here, this was the house which I already have, I bought this years ago. So he doesn't consider them as capital anymore. If you can't draw up a balance sheet and tell him, this is my money, this is my margin, this is my equity in the business, and this is my debt component in the business. So we had to figure this out. It took a long while. So we got a lot of people trained, and chit fund really helped us to understand this. Obviously, safety is our second aim, so we had to get these collaterals in. And many times the collaterals were taken not to ensure our recovery. We just had to put in certain discipline in the borrowers that we did not want them to over borrow beyond his capability. We were trying to figure out a cash flow. We had estimated a certain cash flows, and this is what he is up to, can pay on a month-on-month basis. If somebody was on the side, gave him another loan which is completely on a collateral basis, then he has a choice between either paying to recover that asset back or to pay for his business. We didn't want him to put him in such an awkward situation. So all the time our focus was sure he doesn't have so much of collateral which is easily accessible by third parties. So not necessarily I had an LTV concept, but we were collateralized. LTV was incidental, many times it was. Oh, it can be 50%, it can be 200%, it didn't matter. But the next was to, after having lent money, then collection. The hard way, really hard way. And MSME customers, just as we are extremely proud to say the best Indian borrower is a truck financier, we would say equally today I can say that MSME are the best borrowers. Their intention to pay is always there. They're there as they want, as I said at the beginning, they would like to be debt free at the earliest. But again, they're businessmen. Every businessman, before he finishes the first project, he's looking at the third project. That's a true quality of a businessman. If he's happy, he's content, then he's no more a businessman. He's retired. So we find our MSME customers are always looking for something more, something more. If I have done this festival season, why don't I do better than the next festival season? Why don't I stock up more? Why don't I add an additional product? If I have small space in my showroom, can I stock something there in this space? Can I get a little more land parcel from the next shop and can I add one more attachment? Now where does the money come from all this? It's this same business which is going to go there. So we continuously see this amount of very pleasant way of diverting funds. Not in a negative way, but there is a business which is there and a business which most progresses thereafter. And unfortunately, this is only one time I always feel when I review my portfolio is that I wish I was a bank. There's one product which I can't give is a working capital financing. If only we could give a working capital financing, if only we had a demand loan on our liability side, we would be the best. Because I don't think you need any other alternative financing for the MSME. Want of and very appropriate liability or liability structures on our balance sheet, we end up giving a very, very imperfect product, which is a term loan, monthly amortized, practically 2 to 3 years. which means at the end of 3 years, the borrower is, whether he likes it or not, he has to settle the principal and interest. And you just imagine a businessman, he is putting his money in the stock, and end of 3 years he has to get the principal back and has to continue to keep his stock in the system, which means he has to earn double. This has been possible, continues to be possible only for the very, very, very good reason that the leverage in the system is so low. The equity is 10 times, debt is 1 time. All that he needs to make that 15%, 20% cost, he is able to get this money rotated and he is able to settle down. But as and when he gets into the growth mode, more than what he is right now in, then there is a strain in the system. So what is happening to our so-called delinquencies, 90 DPDs hit the roof. Because the customer is actually, like, without maybe official permission document from me, is actually using my debt as the next round of borrowing from me, invested in this business, which in a banking terminology is an overdraft limit. In an NBFC terminology, it's a delinquent account. Because in a banking terminology, you would only have service the interest and the principal would have been staying in the balance sheet. After 9 months, he has paid 30% of my principal, which would have probably for an NBFC, for a bank, it would have been still sitting in his book as form of assets. If in my book, it will turn out to be a delinquent customer. Because he has not paid as per the agreed original structure, which is the monthly amortized loans. So we have this typical, I heard one investor analyst, I'm not sure, he said, why is Shriram protesting and whining and making such a song about this NPA migration? I said, we are not doing anything for our balance sheet, we are only protesting on behalf of our customers. But our customers are the one who most affected in this, because for no fault of theirs, they were going to be called as not so good customers. In one of my other credit bureaus panel discussions, I said, in a way, I don't like it, because more and more my customers will not be touched by more of the NPA, like the other competitors, because they will look like bad customers. Now, how do you make this judgment of who's a good and who's bad? Because I've said it as a bad customer, but for me, he's a very good customer. And in a way, I would say, backhanded way, the regulator has helped us. That I am going to classify more of my customers as to be delinquent customers, which they are as per my definition. And why are they not a delinquent customers? Why do I still very, very confident about their ability to repay? One, mutual funds past is no proof, but in the lending business, I think past is a lot of relevance. All of our statistics is all on seeing how we have done in the past. And I think there's enough and more data within Shriram to see how those customers have behaved, and it has been very, very, very satisfying. The question, okay, now, will this continue in future? Now, what is the cause of this delays? Has he stopped? Has he changed his behavior, his payment behavior? No. It is only my definition has changed and not his behavior has not changed. Now, where is the problem? He continues to pay what he has been paying, and my returns have been very good. My net credit losses have been the best in class. One important point which I always like to reiterate here is credit losses should always seen in comparison to lending rates and not in standalones. Risk pricing, risk has been priced and the losses have had to materialize. If I did not price it, then I have either been over-conservative in my pricing or too generous in my pricing. So, if I have priced it and there is a credit loss which has been, we have estimated what the losses have to be, and that's a very important tool to ensure your growth is there. If I estimate a 4% loss and then I end up lending at some 30%, then I end up only having 2% losses, then I am actually losing a lot of good customers, which is one form of error in judgment. The other is, which could be very suicidal, is that I estimate only 0.5% loss, end up having 4% loss, then I can be wiped out. It can be catastrophic loss. So, We continue to evaluate the risk, the pricing, the lending rate and the reward and the credit losses, and we have been very happy to see the net losses, credit cost is within our affordable limits. We are comfortable that post that our returns are more than adequate, and I'm sure some of my competitors will keep us on our toes now, and we will make sure we'll have to be either cut my cost or get more efficient. We will work on it. But the current point here is we are having an NPA number shooting up. Because clearly saying it's the simple thing which I always say, that if I did tell today my office timing is 10 o'clock, tomorrow I change it 9 o'clock and tell my 20% of my employees are late, who to be blamed? I change the date, time, I have not informed anybody. And I can't afford to inform my few million customers that you are not paying 90, I'm going to chop you off. And he doesn't know about it. All this time, it's a very industry story or industry trick, I would say, that we make money out of our bad customers. I don't know how many of you acknowledge that. Because the good customers pay for what is the stated cost, which is expecting no overroad expenses. But if I have to recover even the CMS cost, but you talked about cash management, who's going to pay for it? Today cash management doesn't come cheap. Well, you get CASA there, for me it is a cost. The number of checks which I have actually, thanks to the cost which is shooting up, we have gone to the very old-fashioned way of crediting cash rather than checks today. We find that is cheaper than holding the checks and banking the checks and getting the fate of the check after 3 days, then sending SMS, sending calls, and then only 15 days window to close my NPA. I might as well start on the first of the month and finish the collection by 30th. Because if it's cash, my collection starts from first. If it's check, I have to wait for the cash to get banned. 7th of my check, 9th I get the return, 15th I start, 10th I started, by the time I eat all my customers is 15th, and bank collection, reco, I have 10 days time to close 30 days DPD. So all my customers goes into 30 day DPD without any noise. Murmur, they are all 30 day DPD. A bank presses a button, debit the customer's account, credit your saving, your account, your collection is over. I go to a bank, present my check, the whole process is a very long process. We are going to a very old fashioned way. I don't know when we will have coins. The rupee becomes difficult to handle, but we have gone to the cash. 400, 500 crores of cash we collect every month. We find that's much more convenient, and actually a very interesting way. It's a superb touch point with my customers. That's one other thing which we always say. Banks know only the bad customers, very unlikely to know the good customers. Because if you pay everything on time, you could have borrowed in Chandigarh and you could now be in Chennai, the customer is unlikely, bank is unlikely to know you. Because on due dates you have been paying. He will send you call centers, he will send you SMSs, but you are physically not there anymore in Chandigarh, you are now in Chennai. But if you have to collect money from him at his doorstep every month, you will know what is happening to him, where his business is, what is his traffic. Your cross-sell is actually a lot more effective than a very technology-driven, analytical-driven cross-sell. But again, it's a question of scale and cost. And India's manpower is becoming even more costly than technology, so what used to be our asset is becoming our challenge today. So we are going to technology. So we have this huge 25,000 employee workforce, employees. So we decided we'll make use of this. Again, one more, what I again say, in my school days, what was India's problem? Our population. Today, what is India's strength? Our population. So I suddenly realized what became our weakness became our strength today. So same way, what was our weakness was huge employees. Now we decided let me encash these employees much more. How do I make use of these employees rather than sending them home? There's a very trained workforce. More than training, I would say culturally aligned to our business. We do very simple money lending, not rocket science. I don't have to train them about money from childhood. The first day of the child, somebody is dumped to the child's hand. So I don't think money is something I teach people how to handle. But then there's a cultural orientation which has come in this workforce. So going back to it, we understand that the good customers, so-called good customers, are very good customers. And the businessmen in India, we are used to paying fines. Your fine is something. It's not such a big crime. So they pay what in the HDFC part overdue charges, penal interest, check bounce charges, whatever, which is some form of giving me that extra kicker. That is the good. So to me, is a very good customer. Okay, obviously it has to be all said and done, has to be under control. It can't go overboard. Is all things good can't be too much. So we are ensure that is within the control and makes that extra profit for us. And very, very important, keeping this pressure on, keeping my customers coming back to us. Because the comfort, the friendly way of handling those customers, make sure that they are with Shriram for a long time. This is ensuring our profitability, but today I understand that SFBs with a lot more NBFCs active in the MSME space. MSME, years ago when I started off going to the banks, it was considered like truck financing, it was considered a backward. Large corporates, well, this unknown, unorganized, how can I assess it? Do you actually have these businessmen? Do they actually borrow money from you? How would they ever pay you? They are all not very disciplined. Today, thanks to a lot of my peers in this space, it has now got a very, very nice look. That's unfortunately chit fund, we never had that. If you had good players like Capital, Bajaj and others, chit fund would have been a very popular name. It never got the right competitors, right peers to play with. So it's very important to have good ecosystem for this space to develop. I think we are in the right now, Shriram and the rest of other players who are in the MSME space. This is the right space, right time. If we believe that large industries have to grow and will grow, there's nothing short of this MSME space prospering. The bottom of the pyramid will continue to evolve to be the middle part of the pyramid, and that is going to be the space at which we operate. So all the MFIs are helping us indirectly because they are taking them to the next level, and that's when we will take over from the MFIs and provide a slightly more larger sort of products to these customers, more convenient sort of products. While there is a product for the banking industry, but there is a product for the NBFC industry. And I'm again slightly very happy the regulator is keeping so much pressure on the banking sector. That there's so much of challenge in doing your business. I think for some time to come we will survive. And we will survive so well that we will take our decision to see how we progress to the next level thereafter. So this is our I would say not only just our vision in the business, our commitment to the MSME space, and to make this happen, we've had today we have support from the host of bankers, and if there are bankers here, I can say don't worry, your private sector is going away from the SFBs. We are there to provide you with the private sector. If they are not, they are becoming banks. Don't worry, we still are not a bank. And we can still provide the PSL requirement of the banks. Unfortunately, one caveat. I have a choice between taking a PSL loan or a risk-adjusted pricing on my MSME loan. I typically choose the pricing slightly higher. That way, this 8% cap is a bit of a challenge for us. I would request all the bankers here, if there are any, you can help us lobby with the Reserve Bank to remove that 8% cap. That will open out the door, the floodgates of assets available for securitizing MSME loans. Because most of our MSME loans range from about 15 to 20%, and with the rates of the bank going down, 8% cap is many a times it's breaching and not too much available in the market. But definitely, I'm sure this will get revisited by Reserve Bank sooner than later, and that will give a lot more the funding options for the MSME, and that way we will be able to reduce our lending rates to the ultimate customers. But it's been a very pleasant journey today, more than 10,000 plus crore of MSME book, and our aspiration to definitely continue to grow a lot more than what we have done. We have done about 30% plus CAGR in the last 5-6 years, but our ambition is to do much more than what we have done now, because now we are sitting on all the right. We have the capital, we have the banks to provide the debt, and obviously more than important, we have the infrastructure, we have the workforce, we have 1,000 plus branches. Hardly about 500 branches right now offer this product on a complete suite. So we have an expansion, ready-made branch network readily available for us to press the accelerator, and that should take this space much more interesting in the next couple of years. Happy to answer your questions.
Can you just, I didn't really understand how a borrower is paying on time and properly and becomes liquid. Can you just explain that?
He does not pay on time all the time. So he has a 1 or 2, 3 EMIs he keeps as outstanding. Which is like what he has to pay me if he has deployed back in the business. I become a second small loan, third small loan. These end up being is, without an agreement, there's a refinancing which is happening. So which in terminology is a delinquent customer. So invariably a 36 months contract gets to 39 or 40 months contract, whereas he takes that extra 3-4 months to pay up the money. So in the intervening period from when he has become delinquent, he continues to 3 EMIs outstanding, 4 EMIs outstanding, he is delinquent.
So what you're saying is in the banks would treat it as an overdraft, but you're not allowed to do that.
And on top of it, not only an overdraft, the bank will only recover interest, but I would have recovered by then 80% of the principal. So it's actually a 3-year loan is effectively a 6-year loan equal.
Hi, I have a question. Yesterday, in a couple of meetings, we understood that the MSME market is almost 10 times the microfinance market. Is that true, or would you put a number to how big the opportunity is?
The expert on microfinance did not want to put a number. Why do you expect me to put a number? He was an MSME. So your calculation starts with his number being the base number. So first I don't have that number, then I can give you my number. But nevertheless, okay, that's a lighter part. I don't think in India, for a long time, these businesses will have to worry about market shares. It's very, very long time. There's room for 10 more Shrirams to come in, and still we would have just scratched the surface. So I don't think people ask, are you looking at this getting overcrowded? No way. And on the contrary, I would definitely say that this market has to get more active participation from all the players, more, I would say more responsible participation. It should not get into a system of a bit of a hurry to do, which can kill this segment itself, because the customer needs to be understood and has to give patience to understand the customer. But if this is a very played by mature players, very balanced, long-term version, there's room for 10, 20, 100, I don't know, the numbers is enormous. 10,000 crore, I feel, when we got the certificate saying India's largest small financing, I said, what? It's like this typical, I don't know how many of you know, there's a Rasgulla advertisement in whatever the advertisement. You come first in standing with 2 people running. So I stood first with nobody there in participating in the race. So it's as thing as that. But being first or being largest is an irrelevant number in this whole space. I mean, we should be ashamed for that this market is not being served the way it ought to be served till now. But it's an evolution, because you start with the top, you start with the bottom, it is clear, and it just goes down. Both sides will have to meet. We are somewhere in between.
So what are the major challenges why people are focusing on banks are focusing more on a large corporate for a lending? Housing finance as a space has become a reasonably big for banks and for the specialized players, and so does the MFIs also. But in MSME segments, you don't see that many people enthuse about it to enter the space. Is it a tenure of the team, or is it a cost, or is it a fear of delinquencies or NPAs, or the growth they are not seeing what it is they're actually doing? What do you think is a key challenge?
I think in my mind, what is the key challenge is, I think in India we did have in the public sector the enthusiasm to lend to the space. But somewhere this fear of vigilance came in. CVC did some lot of good things, but CVC also took away the lot of enthusiasm and the taking the proactive step in this lending space. I think private sector again got into it somewhere in the form of unsecured loans and things, but then in the liquidity crisis there was this pricing shoot up, profits, much of the money was spent in origination, did not have money left behind for collection, so got caught in this. But to me, what is the biggest challenge for this segment is the ability to take that call on a customer without too much documentary evidence. And to be, that's what we say, empowering employees. So if you are in a head office mode and you are wanting to make sure that your every document which is makes you feel very comfortable, then unlikely to get customers in the space. It's very difficult, or you will have those imperfect documents getting cloned as perfect documents. And you are in the lending with the hope that things will not go wrong. Sitting at head office. So there's a lot of delegation required, a lot of empowerment required, and a lot of trust required. And this has been, all of this which I said has been in short supply right now. So many a times this is done very proprietarily and very rarely very professionally. The minute you want to be professional, you want to make sure that whatever you do is answerable, verifiable by the world. And I can't say, I saw him, I think he does a good business. I've been here for 10 years, he's been here for 10 years, he's got this, he's done this shop, I recommend. Now tell me how you can say this, show me his ID return, show me his bank statement, nothing. You should know that I've been here for 10 years, I am saying that he's here for 10 years. And I say that this is the business he does, this is the verifications I've done. And I have taken his last month Kacha book. I have seen the stock which is there. I've sat there for 15 days, 10 days. I've seen him at 10 o'clock in the morning, what sale happened, at 12 o'clock, what happened at 5 o'clock in the evening. I've seen whatever movements, what is his credibility, what wealth he has created in the last 5 years. That gives me the confidence that I can give him 5 lakhs. Now, you say 5 lakhs is large, his ID return, tax return, his bank statement, his P&L balance sheet, auditor certificate, 3-year forward numbers, SEG, monthly, quarterly reports. Where is he? He's lost. The same, when you do the 30,000 rupee microfinance, you feel less worried. But if you do 5 lakhs, you feel worried. But you do 500 crores without any worry. That's the beauty of the business. Because when you do 500 crore business, you feel that the crowd, you can't sack 100 people, no? So you are safe in numbers. So everybody 500 crore loans are done like this. 5 lakh loans nobody wants to do. And 30,000 rupees you feel it's okay. The mass scale business. You're permitted to lose money. License to kill that there is. And when you do a large loan, there's a license to kill. There is a in between is where the whole approval, societal approval is lacking. The entrepreneurship in the employees, the societal pressure, and today with the regulatory pressures on NPA, delinquency, is only putting the unreasonable pressure in the market.
Okay, the lady wants please.
Ma'am, my question was quite similar to what you answered, but I just wanted to add to it that now when you move to 90 days, would your customer would find it much better to go for that working capital loan which you are not able to now provide, and with the same kind of constraints on repayment, it will be much easier or suitable for him to go to a bank and then do a little bit of hassle of documentation, which you said, which I think now he's a proven customer, that he has a proven Shriram City Union repayment.
My own visa will go out, be used against me. Okay. Yes and no. I do expect a few of my customers, not immediately, in the due course of the next couple of years. But let me say upfront, we are not trying to make all our customers learn 90 days and think that it's a sin, 91 days is some sin they have committed. So, very candid about it. We are not going to go around carrying a candle for the Reserve Bank of India. That's their challenge. Okay, we have a very clear, we know what ultimate credit losses will be there and we work on those. And let us see when IFRS come in, it can change the game altogether. IFRS doesn't have a stricter numbers, and there's a loss estimate which works in IFRS rather than the calendar days past year. But anyway, that's still 2 years away. But honestly, today we are not making our customers very feeling uncomfortable about 91 day being a bad number. While we also clearly understand this is not going to be, Shriram is not the only mode of communication or information to them. They have other sources of information and this will percolate over a period of time. The question to answer whether we being an inferior product and they have a better product, I think more and more Reserve Bank will tighten the process of loan giving. Even my large customers will come back to me is what I feel. I'm worried about flooding of the bigger customers coming to us rather than the smaller customers going out of my way. Because it's, the way it has been structured today, I don't think banks are in the mood to lend at all. Okay, they can say I have a problem, they can say I have capital problem, but anyway they have no interest in lending today. Now who's going to provide the capital to the banking, who's going to provide the enthusiasm to lend first? It's an institution which is, I'm largely talking the PSUs, have lost their enthusiasm to lend. And the larger industries in the middle industries, not the very large, I'm not talking the 1,500, 2,000 crore, I'm talking of even the 5-10 crore space itself is getting out in the open today. They will be searching, and that's probably one reason why LAP is doing so well. It was an indirect route for the 1 crore, 5 crore loans, which are using collateral-based lending rather than a cash flow-based lending. With easier, simpler transactions which are getting observed. I think there is room for all of us. As I said, I am scratching the surface. I don't have to worry about customers going out of line or somebody goes and somebody will come back. Because the market is just getting wider and getting better. And like what we said in the SFBs, we hardly have done, even I can say I have done Tier 2, Tier 3, Tier 4, Tier 5, but I hardly do anything there. It's still the Tier 2, Tier 3. I do have branches in Tier 4, Tier 5, plus nothing much happens right now. It's an evolving market. So there's room for all of us. 30% growth rate is a very, very small number. It's just, sometimes I only tell my colleagues, it is not how fast you grow, how far you manage the business should decide the growth, rather than whether the market is large enough for you to grow. You can just bite in, you have to chew and digest it. That managing the entire portfolio is a much bigger challenge than just gobbling up everything. Today I don't think we are looking at gobbling up the business. We have a responsibility and obviously a lot of stakeholders and we have new partners now. So it is becoming even more important that we deliver the result. And therefore asset quality becomes even more important, or profitability is even more important than the sheer numbers on the balance sheet.
It's interesting the kind of customers you are targeting. So my question is, you might have lakhs and lakhs of customers. What kind of KPIs do you monitor, and how do you keep a track of those across the organization?
Customers or employees you're talking about? My employees.
Customers. So some of them are delaying payments. So is there a genuine problem, or they will pay? What kind of KPIs do you monitor?
Simple. When my customer refuses to connect with me and continue to pay, I don't mind having a 2 EMI, even 6 EMI outstanding. 7th he continue to pay and keep paying thereafter. So no connection with the customer, no cash flow coming in, stops paying is my worrying sign. Okay. If he has 3 EMIs, even 10 EMI outstanding, I'm still in the 10 months which is outstanding, I'm still in contact with the customer. My employees still connect with him, have a cup of coffee with him. From head office we go, we end up talking to him. He doesn't gets worried about us. My audit department goes in, he has a good conversation with him. And he says, yes, this is my 1, 2, 3 problems, and this is where I start with, and this is where I'm going to finish. And I'm going to give me this time. And he at least shows a sign of payment. I was told somewhere in MFIs that 15 days is a mortality rate. 15 days he does not pay, then he doesn't pay on 16th day. I don't know whether that number is there. Here in case of our business, even 1 year is good enough. Nothing to worry. If he is in business, steady, sitting there, running his shop, running his lathe, running his printing press, running his kirana shop, he is good customer. He is just using me as his next working capital without maybe taking my high mighty permission. That's all, nothing to it. He is running his business. He is there. He will continue to pay. 30 months contract become 40 months contract. So wait. He pays the 40 months with interest. He is not going to pay the same money back. He is going to pay. So I am actually lending him indirectly. Now it is so-called arrears is actually my future principal. Amount to be recovered from the customer.
So a related question, do these customers appear in CIBIL database or some other database and their credit scores are being monitored by institutions or like CIBIL or not?
Not for that.
Not yet?
Will in due course of time.
And the third question is, it is related to performance of customers. Are some of your customers being affected by this e-commerce, especially people who are selling products? Are they being affected by the e-commerce wave which has hit us over the last 3-4 years?
The bigger city customers, metro city customers with showrooms, yes, they have had some amount of e-commerce transactions. But actually they're very pleasant. The smaller towns, many of my customers have become e-commerce vendors. So they have actually, their scales have phenomenally increased. Like in towns like Trichy, Madurai, Coimbatore, all that I know for certain, my customers' requirements are like, got jumped 3 times, 4 times. What he was doing, some bag, which today when I see Amazon, I say this is a bag which my customer is supplying here. Because he was selling in some small shop in some murder street somewhere. He is now becoming a supplier to some e-commerce guy. So it's actually changed in a very, very positive way for us. Many of my
for some it has become an opportunity and for some it's a threat.
Bigger cities, yes. Because e-commerce is affecting the, where the real estate space becomes an issue and the price. So at the end of the day, we pay price for our real estate. The price being what it is, the commodity price being what it is, the much of the price is paid for real estate. So showrooms becoming irrelevant is getting the cost down in some places. That affects where real estate becomes an important asset class for them.
Thank you.
One question from mine. So, the way I see your evolution as a small business lender over the last few years, we won't look at the other slices of the business for the purpose of this question. The reason why people like you have succeeded, or like your firm have succeeded, is that there is a huge untapped credit opportunity that the banks have let go over a period of time. The small ticket, so call it single-digit lakh to single-digit crore, let's say, right? And that's primarily because the public sector banks are being lazy, incapable, inefficient, call them what you will. They were present in a small way to begin with, but then they've increasingly let go of that. But now there's a whole new generation of either smaller banks, regional banks, SFBs, who all want to be in this space. And the advantage they have over you is that they are also banks. So which means there's a whole lot of transaction capability that they offer to a customer which you don't or you can't. So the reason, and it's not that unlike let's say in the MFI space, that these people are financially excluded or they don't have accounts or the banking system cannot reach them, they don't have IDs or something, or all of these people have savings accounts to begin with at a personal level, they have current accounts in their business. So what is the reason for someone to stick to scuff at 18, 19, 20% when over a period of time they can aspire to go to 14, 15% and go to, let's say, a Vaisak, which is now Kotak, or a City Union Bank or a Lakshmi Vilas?
Two things. When they are ready to do 14, we will also be ready to do 14. So I don't think that from the cost of funding point of view, that should not be an issue. They will be able to match the equity. As if I'm making a 5% ROA pre-tax, I might settle down for a 4% ROA and do a larger volume business because the infrastructure is already there. We are already contemplating that. But another partner in our business is the tax department.
The tax department.
Yeah, they do very good partnership help for me. It is making so terribly difficult for them. The minute you become a bank, the customer run away from the customer from their space. And he feels he's being watched by the Uncle Sam in India. So they are not. They have the challenges today. They believe any bank, other than a blood bank and eye bank, is a government monitored bank. You can say you're private, you can say public, anything. You can say I am a small bank. The minute you say a bank, I am under the scrutiny of the tax department. Anything which I say, anything I give you data which will be monitored by third party. So good. So my partner in
Trying
crime.
to tell me that legally speaking, or from a regulatory perspective,
They are
the
far.
income tax people cannot ask you for information.
They see the question here is they have so much.
Or they
work to
haven't
do.
asked you so far.
They haven't asked me for certain, and I have nothing to give either because I don't capture those data. How can I even give what I don't have? So they are supposed to have all this, and they are supposed to share all of this. So my partner in crime is the banking tax department, the central government or the state government, whatever it is. And the customers are very wary of why would they have a savings account, current account, but still do cash transactions. I mean, it's not, forget today. You have, each of my customers are willing to give me a posted checks, which means they have a bank. But they don't tell me very clearly, please don't present it. Before it comes due date, I give you money. Because I don't have money in the account. Because I don't put money in these. I have an account, I have a checkbook. Only because some of my customers have this thing. But I do all my transactions outside that. It's a convenience today. It's a convenience too. As rightly said, to draw money I have to go so much work. Why would I even want to go through that? I'm also hopeful and I'm very confident this will also change. So what is so-called my strength can become a bit of an irritant for me in due course of time. Like technology, like mobile, like e-commerce, digital, cloud, we need to evolve. So I can say this is what we are as we speak today. But this is not necessarily what we will be for next 20 years. Shriram has changed in the last 20 years, we will continue to change in the last 20 years. We are very conscious about this change which is happening in Indian market. We are right now going through a complete business transformation exercise. There is a huge project which is right now running in our company, which is the last 6 months and go for 1 more year from now. And we are preparing ourselves for plenty of changes which is likely to happen in the banking space, in the technology space, in the rural market, mobile, e-KYC, your Aadhaar, biometric, maybe iris verification, all sorts of verification. We will be very much prepared to handle those changes. We are not sitting on our laurels saying this is what we are and we will never change. We are very much, but it will be changed as we not very fashionable, may not be very fashionable, but as we consciously decide and move forward. It will definitely happen. We are conscious about it. We are extremely conscious about it and we continue to evaluate in a very friendly manner what is happening around us. We are not sitting and we will not be dinosaurs for trust us. It is unlikely that we get extinct. Thank you so much.